The market just blew up. S&P 500 is down. Nasdaq is down over 10% from its peak. Oil is sitting near $110 a barrel. Recession odds just hit 49% according to Moody's AI model. And your portfolio is probably not looking great right now. Before you panic, before you sell anything, before you do anything, watch this video. Because right now, in the middle of all this chaos, there are 7 specific stocks that smart investors are watching very closely. Some are for protection, some are for growth, and some could make you a lot of money when this is all over. Let's go.
Let me give you the full picture in 60 seconds. The S&P 500 is down roughly 7% year to date. The Dow is down about 8%. Nasdaq is down more than 10%. The VIX, Wall Street's fear gauge, is up 73% since January. That means investors are terrified. The Iran war sent oil from $67 to over $110 per barrel. Tariffs pushed average rates from 2% to 12%, and the U.S. lost 92,000 jobs last month, when economists were expecting a gain of 59,000. That is a brutal surprise. But here's the thing. This is exactly the kind of moment that creates generational buying opportunities, if you know where to look.
Stock number 1, ExxonMobil, ticker XOM, and this one is making people rich right now. ExxonMobil is up 24% in 2026 alone. While everything else is falling, Exxon is surging. Why? Because oil is at $110 a barrel, and ExxonMobil is one of the biggest oil companies on the planet. Here's the historical proof. In 2022, when the S&P 500 crashed over 19%, ExxonMobil stock surged over 80%. While the entire market was bleeding, Exxon investors were making massive gains. Right now, the Iran war and Strait of Hormuz tensions could keep oil prices elevated for months, and ExxonMobil pays a growing dividend it has increased for decades. This is a classic safe haven play, and it's working right now. If you don't own energy in this environment, you're unprotected. Stock number 2, Chevron, ticker CVX. Think of this as ExxonMobil's slightly smaller but dividend-paying cousin. Chevron is also up double digits in 2026, riding the same oil wave. But here's why Chevron specifically makes this list. Chevron has an ultra-low debt-to-equity ratio of just 0.22. That means even if oil prices crash suddenly, Chevron can survive. They have the balance sheet to outlast any storm. And Chevron's dividend yield is actually higher than ExxonMobil's, making it more attractive for income investors. Morningstar analysts say Chevron enters 2026 with low debt, robust production growth, and a clear path to $3 to $4 billion in cost reductions. In a volatile market, you want companies that can survive and pay you while they wait. Chevron is exactly that. Stock number 3, Microsoft, ticker MSFT. And this is where it gets really interesting. Microsoft is currently trading at its cheapest valuation in nearly a decade. From a price-to-earnings perspective, Microsoft hasn't been this affordable since the early 2010s. Here's why that matters. Microsoft is not just a tech company. It's the company that the entire world runs on. Windows, Office 365, Azure Cloud, and now Copilot AI embedded into everything. Enterprise AI adoption is driving massive recurring revenue, and during past recessions and crashes, investing in Microsoft has almost always been a great decision. After the 2020 crash, Microsoft delivered above-average market returns, and right now, at this valuation, the risk to reward is the best it's been in years. This is a stock that lets you sleep at night. Stock number 4, NVIDIA, ticker NVDA.
Now, NVIDIA has had a rough start to 2026. Tech stocks got hit hard, but here's what every smart investor knows. NVIDIA's fundamentals haven't changed, not one bit. NVIDIA's GPUs are still the backbone of every major AI system on the planet. ChatGPT runs on NVIDIA. Self-driving cars run on NVIDIA. Data centers run on NVIDIA. And despite the sell-off, NVIDIA now trades at just 20 times forward earnings. That is cheap for NVIDIA. Goldman Sachs analysts say 2026 is when AI transitions from the spending phase to the productivity phase. That means the companies that built the AI infrastructure, like NVIDIA, are about to start collecting the rewards. If you missed NVIDIA at $100, this might be your second chance.
Stock number 5, McDonald's, ticker MCD. I know what you're thinking. McDonald's in a stock watch list? Yes, and here's exactly why. McDonald's is what investors call a recession-proof stock. During the 2008 financial crisis, the worst economic collapse in a generation, McDonald's revenue and earnings actually grew. Think about that. While banks were collapsing and people were losing their homes, McDonald's was growing. Here's the psychology. When the economy sours, people don't stop eating out. They just trade down, from fancy restaurants to fast food. McDonald's is the king of the trade-down economy. Right now, with inflation squeezing every household budget, value meals are more attractive than ever. McDonald's system-wide sales are still growing at around 8%. This is a stock that protects you and pays a dividend. Stock number 6, HCA Healthcare, ticker HCA. This one surprises a lot of people, but healthcare is one of the most defensive investments you can make. And HCA is one of the biggest healthcare companies in America, running a massive network of hospitals and facilities across the U.S. Here's the simple logic. People don't stop getting sick during a recession. They don't cancel surgeries because the stock market is down. Medical demand is constant, no matter what the economy does. And a big chunk of HCA's revenue comes from insurance companies and government programs, not directly from patients' wallets. That makes revenue incredibly stable. Wall Street analysts say HCA still has considerable growth on the horizon, and a market crash is unlikely to change that fundamental story. Stock number 7, Broadcom, ticker AVGO. This is the one that most people haven't heard of, and that's exactly why it's on this list. Broadcom makes custom AI chips, and these chips are becoming real alternatives to NVIDIA chips for certain applications. Meta, Apple, and other tech giants use Broadcom chips, and Broadcom's management team expects this AI chip business to generate over $100 billion in annual sales by end of 2027. Let me say that again, $100 billion from AI chips alone by 2027. Broadcom is also up significantly in 2026, despite the market chaos, and it trades at a significant discount compared to NVIDIA, giving you AI exposure at a lower price. If AI is the future, and it is, Broadcom is one of the smartest ways to play it. So there you have it, 7 stocks to watch right now, before you do anything with your portfolio. Let me recap. ExxonMobil and Chevron for energy protection and dividends. Microsoft and NVIDIA for AI at bargain valuations. McDonald's for recession-proof stability. HCA Healthcare for defensive healthcare growth. And Broadcom for smart AI chip exposure. Now, I need to be clear, this is not financial advice. Do your own research. Talk to a financial advisor before making any decisions. But if you're watching the market blow up right now and wondering what smart investors are actually looking at, these are the names. Subscribe, because next week we are breaking down which of these 7 stocks Warren Buffett would actually buy. You don't want to miss it. Subscribe to Mila Invests. Thank you.